Welcome to TheoTrade. This is Don Kaufman. It's August 4th, 2023. Just about 30 minutes to go to the cash close here on this Friday afternoon. And, well, what a Friday it has been. S&P's trading up to 4560, now trading back down to 4500. Volatility, we're going to talk about it in just a moment. It might be making a comeback, but the real question on my mind, is there going to be a rally back or another huge smack in next week's trade? Let's get right down to it here on this weekend's update. So SPOOs at this moment, and if you don't speak Trader Geek, SPOOs means S&P futures. They're down just about 20 handles. Again, we were up here trading 45.60. Why is that so important? One of the things I was talking about on last weekend's video, I was talking about it on a Wednesday night, is simply that in the near term, you wanted to be a what? A net buyer of options. Why? Because the expected move in markets was very, very minimal. And I kept saying, like, look, actual moves are going to outstrip what was expected. That is, the option marketplace for the entire week was only expecting a $54 move. Yeah, well, right now, you got a 60 handle move, okay? Literally, we're on like a 60 handle move right now. So that's, again, put on the big boy pants. We're moving right now inside of the marketplace. That's one of the first things I wanted to mention is that the move today, it's not unprecedented. You've seen a multitude of significant moves throughout the course of this week. And as I said, volatility is absolutely starting to rock out there. But again, that whole question is, are we out of this? And when I say, are we out of this? And again, I'm going to try to answer this to the best of my ability. Are we out of what has been this perpetual feedback loop to the upside? I mean, really? How many days of sell side activity have we seen? And is this sell side activity right here, is it any different than we saw right back there and right back here? A little sell side activity over there. I mean, how many times do we have to go through this little sell side activity and then we rally right back? Okay, we're going to try to answer that exact question on this weekend's update. Again, rally back or ready for another smack? Let's get right to it. You know, in looking at the marketplace, all right, not just right now, but throughout the course of this week, there are absolutely some, well, bullish areas of the marketplace, and there's clearly some bearish areas. You know, evidently, the marketplace has sold off a little bit. However, there is one really critical aspect that is not in play for sell side activity. So at this point in time, you can look all you want at Apple, all right? No, it's a huge breach to the downside. Look, okay, Apple today, all right, unto itself, it's down almost 5%. You know, from a $3 trillion market cap, that's the weight against the marketplace. And again, I don't care how long you want to look at the tape over here. Google is relatively unchanged. Microsoft's actually up in the day. Amazon, okay, it's rocking. Things still up almost 9%. Where's the weakness out here? Oh, what? You're going to point out Tesla? But still, my heart, that looks like every other trading day. It goes up or down 2% every single trading day. NVIDIA is actually positive. The only thing you have leaning on markets right now is Apple. Now, you know, contrary to popular belief, that's actually not bearish for markets, okay? In conjunction with that, probably the single biggest aspect that I look at, and again, you have to look at correlation properties. You got to look at correlation properties. And I've mentioned this just extensively. So for those of you that do not speak market geek, I know I've said that a couple of times, but I got to geek out on you here a little bit. Because to answer that question, like, are we seeing a change of tone in markets right now? Absolutely, unequivocally. There's been nothing but upside. So finally, you see a little sell side activity. Everybody's freaking out, but you got to understand, okay? Right now, it's not necessarily all engines go to the downside. Because if you take a look at the S&P 100, right? I know that there's like 80 stocks trading to the downside, but that's actually not correlation. Now, granted, there are a couple of earnings announcements here and there, and that's having influence. It is. It doesn't make a difference. I don't care if there's earnings or not. I don't care that Amazon came out with earnings. okay? If markets start to correlate, and I want to give you an express idea of what correlation is when there are 90 products trading, okay, on one side or the other. So the S&P 100, ironically, the S&P 100 has like 101 stocks in it. Google's listed twice. But anyway, the S&P 100, when there's like 10 stocks up, 90 stocks down, would be construed as, if you will, full-blown correlation. Okay, and vice versa. If it's 90 stocks to the upside, it's actually only about 85 stocks to the upside, and 15 to the downside. That would be correlation, if you will, to the upside. Nevertheless, we haven't seen it. We saw a glimpse of it last week, and I talked about that, just a glimpse. Okay, but this isn't it. And again, you got Amazon, and when I said like Amazon a moment ago, I don't look Amazon. Okay, it is what it is. It's, well, it had good earnings. There were stellar earnings. I don't care if this marketplace was going to correlate. They would smack Amazon right along with the rest of the marketplace. Why? Stat arb, statistical arbitrage, okay, treats the marketplace like a basket, and it grips hold, and everything moves, okay, in relative tandem. That's what kind of that correlation means on this front. Okay, it means like everything just starts to move as a basket. If you're in the basket, which is the S&P 100, you move with the basket. We haven't seen that in a really long time. When was the last time we actually saw that? I mean, people, that's one of the issues with this, what I term a perpetual feedback loop. And again, this gamma squeeze to the upside, as I mentioned last weekend, this is not a retail rally, okay? It's just been one-sided trade effectively to the upside, and there just has not been great degrees of correlation at all in here. You will know this marketplace has changed when you actually look at the advanced decline line and it's getting popped, and there's 90, 95 products trading on one side or the other. It ain't over. There's 20 minutes left in the session, okay? Nevertheless, there's some stuff that's really close. We're very close, but we ain't home yet. And that's one of the key factors. All right, next on the docket. And again, that key factor, look, I did not try to construe that as bearish. Like everybody knows, look, I have bearish positions on. I'm sitting with, negative 3,500 SPY beta weighted deltas right now. I have bearish positions on, okay? But what I just told you shouldn't be construed as bearish. On the contrary, okay? It's not showing, the full bear. Still halfway in the cave at this point. All right, continuing on. The next thing is market fear making a comeback. For those of you that know a little bit about me, I'm not a big VIX guy. I'm not a big VIX guy because it's like 30-day volatility, okay? The nap fest. Nobody gives, crap about options 30 days out anymore. Want to see all the volume? All the volume is like right in the here, right now, which I'm going to cover here momentarily. There's no question. VIX today, okay, it's going up. Parabolic, if you will, in portions of the day. That basically means ever increasing slope to the upside. But outside of VIX, okay, is there movement in fear? Is there truly movement in fear? So I'll bring you down to like VVIX, okay? No question that thing is rocking to the upside. VVIX, the volatility index, which is indicative of big moves of the VIX. It's rocking to the upside. When it hits 110, it's on at that point. So you got to keep good eyes on that. But once again, we're not home yet, right? We go over to the volatility futures. Forget about looking at a chart in the volatility futures. Like it's just, whatever, looks just like the VIX, right? What you want to look at is contango and backwardation, right? So right now we're looking at Augie. Augie is the August. It's got 1750. You go out to the next expiration out, it's at about 1830. We're still in, okay, a pretty good what we term contango. That means volatility looks something like this, okay, where if it looked like this, we'd be in the throes of some more significant volatility. But if you look a little further out in time, though, I'm just going to give you a little cautious tale here. Between SEP and OC, they're actually much closer than you would expect at this point. They're only about 50 cents apart, okay? So crazy enough. And this is actually very crazy to say this, but how much sell-side activity has there really been? Like how many days? Yeah, I have what? Like 2, maybe 3 real days. I mean, this was like, there was a day of selling until we rallied right back up. And there was a day of selling till we kind of didn't do anything. And there's a day of selling. Like there just hasn't been that much sell-side activity. Let's call it 2 real days of sell-side activity. And we're actually looking at volatility futures look kind of edgy at this point. And by edgy, I simply mean we're not that far from vol futures saying it's on. Like, be careful, because this can go from, the docile animal that it has been to raging volatility, and it's going to feel like it's snapped and we might be setting up for a much, much more significant move. So is market fear making a comeback? Unequivocally, the answer is yes. Like you can look at VIX and you can say yes, and you can look at VVIX and say yes, but let's go to the SPX, the mother of all products. Okay, now this is important because when you're looking out in time, some 30 days out, you'll see VIX is again 30-day volatility is about 17. But like a week from now, what's volatility a week from now? 16 and change. The thing that really grabs me there, okay, and it really does kind of, that this volatility that's 7 days out, that's next Friday, right? Still only at like 16 and change. Now, granted, there's 20 minutes left in the trading session, right? I've seen crazier things happen. It feels heavy out there. And by that, I simply mean like, look, we can, this marketplace could crack and can fall apart. But frankly, I would like to see this volatility, which is presently at 1646. I want that number to eclipse VIX. Why? Okay. And this is why I'm like not huge into VIX. Like it's like looking at VIX, it's whatever. It's like it's just bids and offers from 30-day vol. Okay. I mean, basically all volatility is just bids and offers kind of averaged together. But 7-day vol, okay, I'm looking at 7-day vol versus, for instance, 30-day vol. I want to know that we're in the throes of some volatility. Like, is there risk right now in the next 7 days? And the answer is, well, no, in the next 7 days, they're still pricing risk less than 30 days out, which means the risk is still further out in time. I want risk now. I want to see risk here. We're right on the verge of that. Okay. So is market fear making a comeback? Yeah, it's making a comeback. Okay. But it ain't back yet. And that's why when you look at this marketplace, you're like, it's getting killed. And that's not getting anything. All right. You haven't even like skinned your knee yet in volatility. But go look at the SPX, right? Don't worry about all the lines in here. In fact, I'll even use the spiders. Okay. It hasn't even hit like but a bump. Oh, did you feel that? Okay, that's it. You'll know when there's sell side activity. Oh, you will know when there's sell side activity in this marketplace because we have been straight up almost every single day. And as I said, okay, we're not correlated. We're not seeing short-term vol, okay, screaming over the longer vol. And again, I like using that like 7-day look. A lot of people think to themselves like, oh, that is kind of interesting. And forget using, like, I know some people use, there's different VIXs out there, different VIXs. There's VVIX, which is the volatility index. Use like a 9-day VIX. Yeah, but the 9-day VIX kind of proves my point as well. I like about that 7-day volatility out there because I'll tell you one thing about the 7-day vol. Okay, that's next Friday. I know there's some size rolling into that, right? When I say size rolling in, there's some big size, some big volume starting to roll into these options 7 days out, much bigger than any other day, okay, of next week, right? Again, I ain't new here, so that size, it matters. And this volatility, it's very close right now to rocking that 7-day volatility. By the time we close in 15 minutes, this 1650, okay, could be rocking up to like 18. All I'm saying right now is we're still in what we term, again, a contango. And the contango is short duration volatility is below the longer duration volatility. What's a backwardation? A backwardation, okay, is when what? The shorter term volatility is above the longer term volatility, right? Contango and backwardation in a nutshell. Continuing on over there. It's getting more interesting out here. And again, I got a lot of positions on and they're coming back. All right. I had a lot of stuff on, taking a lot of heat over a lot of recent weeks. And Mortimer, we are back. I mean, stuff that was getting hammered, almost fully profitable at this point. Onward. Well, let's move onward. So market fear making a comeback. We made our point there. Obviously, correlation, we made our point there. Bonds and rates, critical concern. Just absolutely critical concern here. And, I'm going to couple this next point with inflation upticking. Okay. So I made this point on Wednesday evening's video, and it had everything to do with the bond market. The bond market getting annihilated. And, for a second, push aside bonds. Let's just talk about interest rates. Sometimes it's just easier to talk about interest rates. So on the Wednesday night video, I had discussed cracking above where it says 41. Okay, that 41 right there. And I want to make something very, very clear. 41, okay, is actually 4.1%. And this is the TNX. It's the 10-year. So why was that such, okay, a critical level? This is when we open up like a 3-year chart really quick here. We open up a 3-year chart, kind of zoom in for a second. And survey says, well, that 4.1, which is right there, it is a critical level because getting above it, we might go just parabolic to the moon. And the 10-year kind of explodes up there, right? Okay. So what did we do? We hit it. We actually cracked out above, okay, the 4.1. And again, you can see the high right there. You can see the high right there. Now look, I am no market technician, but I will tell you right now, as soon as we hit 4.1, markets exploded above it, okay? And that put, a little fear and loathing into the marketplace. Today, it's reverted back down, okay? Why? Maybe the jobs number. The jobs number was mixed. It really was mixed where, jobs number came in a little bit light, but the previous job number, they actually reverted that back down considerably. So there was a lot of slippage, if you will, inside of the job numbers, a lot of interpretation, okay? The bottom line with bonds right now, above the 4.1, I think is just going to be horrendous territory. The bonds, though, are having a massive rally back today. And it's actually left me a little bit speechless. And I'll tell you why I'm a little bit speechless. The S&Ps, are they selling off and there was just nowhere else to run to? So they started buying bonds again? I actually don't have an answer to that one. But I'm going to tell you, I'm going to couple that with inflation. Inflation, oh boy, this is going to be of huge concern this next week. Look, right now, between August, okay, and September is the longest duration that you go throughout the course of the year without a Fed meeting. There's the Jackson Hole meeting that, the Fed has a party out in Jackson Hole. Yeah, nothing like partying with, Jerome Powell. Maybe they'll invite Yellen out there. Oh, that's a party. Anyway, the bottom line is that it's a huge gap and it leaves so much to be desired between now and then. Bonds are kind of left to their own devices. I'm not sure if this is just a knee-jerk reaction to the back, to rally back up, or are they buying bonds because they see this onslaught of risk coming, okay? Or could it have been the jobs number was just a little bit softer than anybody anticipated, and they're like, well, no, maybe we are going to go back into a recession. And this is where everybody starts talking about, look, there's been no conversation about recession. Everybody's like pushing the recession off. It's not going to happen at all. There's not going to be a recession. Okay. Again, I simply, unequivocally, I do not buy it. I am in the camp that there not only is coming recession, okay, that many smaller businesses are probably in it. You can argue that until you're blue in the face. I don't really care, okay? But when you start looking at things like financials, the year to date, and again, I keep reiterating this, the year to date on the financials, they're unchanged, okay? If you look at the year to date on the energy sector, it's basically unchanged in the year, okay? The only thing that's driving this marketplace is 7 stocks. I know there's always like, oh, but my stock is up, okay? Well, that's great. But the only thing really driving the S&Ps is like 7 stocks. And we could already be in a recession. You wouldn't know, okay? You're going to be driving right now 100 miles an hour right into a brick wall. Markets may already see it, okay? And may already be reverting, okay, those bond markets back up. Why am I so intimidated, though, by inflation? The print's coming this next week. I don't usually mention stuff like this. I am going to mention this. That CPI number. If that thing comes in just the slightest bit hot, it's over for this market. Volatility is going to rage at that point, and we may not wait for it. I think a lot of traders see the exact same thing that I see, okay? And I think that this is the single biggest risk to the S&Ps. I don't care what an NVIDIA does. It doesn't matter. They build more GPU. Who cares, okay? AI, this, nothing matters right now. Nothing, okay? There's no technicals. There's no fundamentals. All that's going to matter if inflation upticks, and it could uptick. Why could inflation uptick? Look at oil. Oil is a real concern because right there, oil's been straight up. So all of a sudden, if inflation upticks, okay, we are going to get pummeled in this marketplace. It's not often I go out on a limb and actually call order flow like that, but it is of critical concern. And whether you like it or not, okay, it's probably why volatility is really up. Well, sell side activity will pump volatility into the marketplace, okay, generate a little fear. But I'm going to tell you right now, it could be a lot more fear if inflation upticks. Because at that point, the Fed, they're not done. They're coming back. And it's going to cause real concerns. All right. So jobs start to cool, but inflation upticks. Nobody's going to like that. All right. Enough said on that front. Last but definitely not least, each and every week, we look at the SPX. In fact, you join us here live at TheoTrade. Each and every day, we look at the expected move. What is so critical to understand, first of all, okay, this week, we were on plus or minus, okay, a $54 expected move. Where are we right now? Outside! Okay, this is just about a 2 standard deviation move, meaning that we were supposed to move $54 higher or lower. Actual move, and again, we started, okay, the week at 45.82. Right now, we're at 44.78. And when I say it's just about a 2 deviation move, yeah, that's pretty much to the penny right now. Okay. I mean, look, 54, times 2, it's just 2 deviation move. It is what it is. The other thing that is paramount to understand, I have warned, okay, for the last several weeks, consecutive breaches of expected move lead to more breaches of expected move until volatility expands considerably. Question is, has volatility expanded considerably? So we looked at VIX. Yeah, but VIX is 30 days out. On a weekly basis, has volatility expanded considerably? We go back, okay, to the 1 week out, because that's where I derive expected move. Expected move last week was what? Roughly $54. Bam. It expands to 81. And we ain't over. That expected move can still change a little bit between now and, it settles out 15 minutes after the cash close. $81 expected move. People, we are absolutely unequivocally seeing an expansion of expected move. So, as I said, volatility, it's definitely making a comeback. We're not rocking yet. We're not seeing correlation, okay? But there's going to be a lot of fear in and around Thursday. Of course, that CPI report, you can push earnings. We're already in the rearview mirror. It doesn't matter what comes out from now, right? Apple's out, Amazon's out, all good, okay? What's going to matter now? Inflation. Inflation, expect vol to rage if it upticks, okay? Bonds and rates are just of absolutely critical concern, but that's going to be tied, obviously, to inflation. I'm not sure at this point, okay, if trade is running and buying bonds because they're scared of S&Ps, or if they're buying bonds because they, again, see pressure coming to the economy. It is just so difficult to discern at this point. But I think that CPI report is going to give us some help. So as I said earlier, rally back or ready for another smack. Looks like, well, today we got a little bit smacked there. S&P's down some 24 handles. That's it. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.